Yo guys, welcome back to this brand new video on Stock Talk Insider. Today I want to bring you back to another stock, and today this will be Grab Holdings. Grab Holdings is a position I want to start making in 2025. Why that is explained in the video further online. For now let's just dig into it. If you haven't subscribed already, just do it if you want to. Like the video. And let's enjoy this video, and I will be enjoying making this video for you guys. I really like the way that I'm just getting better at my English each video. If you look at the last the first video when I tried, it was hard, now it's getting there, it's getting better. Of course it's still not that good, but will be there in a couple of videos. So today Grab Holdings, and just another script I made with all the analyzing and all the numbers that I found and put together on why I would and am building a position in Grab in 2025. So welcome. Today we'll analyze Grab Holdings, a leading Southeast Asian technology company. Will explore why Grab is on the cusp of profitability, review the latest financial performance, and provide a custom stock price prediction based on the most recent data as of 30 December 2024. Grab's current share price is $4.76, and will evaluate why it could climb higher in the next 12 months. So, let's begin by examining Grab's latest financial data, showcasing its steady progress and other things. So, revenue grew year over year to $760 million in the third quarter of 2024, or 20% on a constant currency basis, driven by revenue growth across all segments. On demand, GMV grew 15% year over year, or 80% year over year on a constant currency basis, underpinned by 19% year over year growth on demand MTUs and 22% in on-demand transactions. Total incentives were $462 million in the third quarter of 2024, while on-demand incentives as a proportion of on-demand GMV declined on quarter-over-quarter Q-on-Q basis to 9.8% versus 10.1% in the second quarter of 2024, as we optimized incentive spend that was used to support product launches. So, we also have an operating loss in the third quarter. It was $38 million, representing an improvement of $55 million year over year, primarily attributable to increase in revenue. Market capitalization is about $20.9 billion. This is from Script. Revenue for 2024 is $3.3 billion, up 32% from the same period in 2023. Net loss $350 million, a significant reduction from the $640 million loss in 2023. Adjusted EBITDA positive at $100 million, marking a milestone in operational profitability. Cash reserves $4.8 billion, providing the liquidity needed for sustained growth and strategic investments. So, Grab Holdings isn't profitable yet on GAAP, but in 2025 is most likely that it will in the coming quarter or quarter after that. Normally in the next quarter they will be profitable because they also upped their expectations for the next earnings, and with that upping of their expectations, they actually would normally be in the positive. But there is one thing about Grab: they are diluting just a little bit too many shares, in my opinion. But in the long term, that can be good. But dilution is in the mainstream media not a good thing. Let me say it like that. So, why will Grab achieve profitability soon? Grab is on clear trajectory toward profitability due to the following factors. Regional dominance. Grab commands over 60% market share in its ride-hailing and delivery services across Southeast Asia, a region projected to grow at a CAGR of 12% in digital economy. Diverse revenue streams. GrabFood and GrabMart continued double-digit growth driven by increasing adoption of delivery services. Grab Financial, a high-margin segment poised to contribute 20% of total revenue by 2026. These services make Grab less reliant on ride-hailing and provide consistent revenue streams. So, if you have Grab, we have food and food delivery. We have actually food delivery of groceries. Then we have express, so actually, sending packages and getting packages, documents and other things. Then they also have something like Uber. Literally something like Uber. They have rides, so you can get a ride from A to B. They've also gone head-to-head with Uber, and Uber gave up and sold everything in those areas to Grab and took 25% stake into Grab. So that's a pretty big thing. Then they also have like I just said, cashless payments online and in-store actually they just have financial services segment. To pay online and cashless payments and all of that secure. Also, they do insurance to get everyday protection with accessible insurance. So I think, and I know that they will go on the financial services with a lot of their budget because they want to grow that to a big thing. Because as you know or not, in Southeast Asia there's a lot of room to give people financial services because a lot of people don't have it over there. And that's still something that has to pop up over there and probably will in the coming years, especially with companies like Grab giving the opportunity to people to do that. That's one big thing. And of course, if deliveries just keep growing, keep doing their thing, and mobility is just one thing on their own, those are just some things that will be expanding and just bringing the money in. And financial services will be the one thing that will grow and will be their growth factor, and that for in the coming years. So, operational efficiency. Grab cost-cutting measures, including improved automation and delivery network. Optimization have reduced operational expenses by 20% in 2024. Digital payments growth. GrabPay is emerging as a leader in Southeast Asia fintech space, expected to grow at CAGR of 18% with Grab's financials profitability. This segment will drive high margin revenue. Strategic branding. Partnerships with global entities like Paris Saint-Germain enhance brand visibility, creating opportunities to attract premium users and expand market share. Grab is at $4.76 per share. Custom price expectation based on revenue growth, cost optimizations, and profitability trajectory. I project Grab stock price to reach $8.50 within 12 months, and with a bull case of $10 in the 12 months. This projection represents between a 78.6% upside from the current price, driven by following factors. Profitability in 2025. Grab is set to achieve net profitability in late 2025, making it an attractive option in growth-focused and value-oriented investors. Improved valuation metrics, price-to-sales ratio currently at 6.3. Grab's valuation is modest compared to peers in the tech sector, where PE's ratios often exceed 8. As revenue continues growing at 25 to 30% annually, This ratio is expected to re-rate, boosting the share price. Market sentiments. Grab's positive EBITDA and narrowing net losses are likely to attract institutional investors, creating upward pressure on the stock. It's also a stock that is already in the Nasdaq. Stock price range for 2025. Base case $7.50 to $8.50. Then bull case $9 to $10 if Grab accelerates profitability and expands Grab financial margins faster than expected. Then, conclusion, Grab Holdings is uniquely positioned to capitalize the booming Southeast Asian digital economy with its diversified ecosystem focus on cost efficiency and expanding fintech capabilities. Grab is on a clear path to profitability by 2025. At its current price of $4.76, Grab stock is undervalued compared to its growth potential. My 12-month target price of $8.50 reflect an upside of nearly 79%, making it a compelling opportunity for investors. Grab is not just a leading ride-hailing and delivery company, it's a regional tech powerhouse poised to redefine Southeast Asia's digital future. So, that's all I am thinking about Grab. I really think it is one of the big chances in 2025 to make good and nice returns on it. Of course, it's very risky. I am not a financial advisor that's saying to go buy it. I myself am going to start a position in Grab just because I like the business model and the variety that it brings with its business model. I also like the CEO and the organization itself in how they operate. And I just like the idea that there's just so much potential and just so much growth still ahead for this company, because there's just so many places that can benefit from a company like using Grab, but they still haven't. So like I said with the financial segment, like there are not many people that have financial services, so that's something that can bring very good growing expectations and growing numbers for Grab. And yeah, I like the CEO, I like the business model, I like the company, I like the marketing around it. Yeah, I think this company has very good chance to be a big grower in 2025, especially when it becomes profitable. And I believe it will become profitable in 2025. So yeah, it is a position I will be starting to make. Of course, because they are not yet profitable, I will start slow and building it slow. But when they are profitable and just beating expectations over and over again, I will start going harder into it, because I do think that they can be the SoFi of Southeast Asia. So yeah, I think also that they will go on their financial services further on, and they will really focus. I think they will really focus on that, and just let the other things just do their thing, like deliveries and mobility. They will make some improvements and just try to make it bigger. But I really think financial services is at this moment their main priority, and I do think that's where they want to go, because there's a lot of room to grow in this segment, especially in Southeast Asia. So yeah, I am interested in what this company will bring. So yeah, I will be starting to invest in 2025 January in this company. But first, let's see where the whole of the market will go. But yeah, thanks for watching, and I'll see you next time.